The same way it is hard for you to make profit, do you know that as a trader, it is also difficult to blow account? The reason why you keep blowing account is because you are doing something recklessly without following the due process. My name is Soji and you are welcome to Soji Forex. In this video, I want to show with you how difficult it is for you to blow your trading account. Now, many a time we are only concerned about learning strategy. Some of us, what we have learned so far, the strategy that you have now is enough to make you profitable. The reason why you are not profitable is because you are doing something careless, and that is concerning your risk management. And that's why you keep blowing account. It is important you watch every part of this video to the end. Let's go straight into it. Let's assume you have a $50 account. As a trader, you are having a $50 account. How much are you risking per trade? You need to decide your $50, how much do you want to risk for each of your trade? For instance, I want to risk $5 for each trade. So I'm going to execute my trade now. And after executing, you set your stop loss. I've done my analysis and I have decided that I want to be risking $5 per trade, right? So here is my stop loss. I am risking $5 for this trade. I've placed my stop loss. Now I have to set my take profit. So based on this take profit, I am risking 1:2. So I want to make $10 for risking $5. Now I've set my take profit. Now do you see, if peradventure this trade should go against me, if I lose $5 from my $50, I am still left with $45. I am not going to place any other trade until this trade closes. It doesn't matter the signal you see. One trade per time. One of these you keep blowing account. When you get a signal on GBP USD, you place a trade. When you get a signal on AUD JPY, you place a trade. No, one trade per time. Discipline yourself. One trade per time. If not on this trade, it's either a hit TP or a hit stop loss. I am not going to place any other trade. Or the price begins to behave funny and on my own I choose to close my trade. One trade per time. So now if this trade should go against me, it means I've lost $5. Do you know how hard and how difficult it is to blow a $50 account? 5 times 10, that is 50. So it means that I will need to lose consecutively 10 trades on a roll for me to blow my $50 account. If your strategy is such that you will take 10 trades on a roll and you will lose, you have to change that strategy. It means you have to go back to your drawing board, try something different. And you need to be deliberate and intentional about this. Now with the strategy, with the teachings on this channel, there is no way you will take 5 trades on a roll and have a loss. You lost first one, second one, third one. It is not possible. And I always say backtest this strategy on a 10 trade. If you follow every condition after taking 10 trades, you will be in profit. No matter your loss. Do you know the goal? The goal is lose 6 and let 4, just 4 trades, let it place out in your favor. you will still end up in profit. So it means that it is very hard for you to blow just $50 account. You need to lose 10 trades by risking $5 per trade. You need to lose 10 trades consecutively in order for you to blow the account. So you can see how difficult it is to blow account. It's not by jumping into trade, jumping out of trade. No. Decide, calculate. Which means that from your $50 account, you are going to have 10 calculated decisive entry based on analysis, based on your checklist. What is our checklist? We want to determine the trend from a H1 time frame. After we have determined our trend from a H1 time frame, what do we want to do? We look for our point of interest. This is H1 time frame. Price is above the middle Bollinger Band. That is the easiest way. Every new beginner can do this. Price above the upper Bollinger Band, it is an uptrend. Price below it is a downtrend. Mind you, you can use your trend line. You can use your structural point. All of that is explained in this video. How you can use your trend line, how you can use your structural point, higher, high, higher, low, and how you can as well take advantage of our Bollinger Band. So you look at this. This is my middle Bollinger Band, and I tell you pricing is an uptrend. Price is above it, and you can see price keep pulling back to the moving average, give us a candlestick formation. You can make your entry that way, or you move to your 15-minute time frame. Since price is already the upper Bollinger Band, and a 15-minute time frame to price is above the upper Bollinger Band. Look at your candlestick formation. So you can use any of these. All of these are in the previous video, how you can find entry. What I am concerned about is how difficult it is for you to blow account. Go back and check that thing you are doing. Do you calculate? Do you plan your trade? You have only $20. Don't you think risking $5 for a trade is too much for a $20 account? You should be risking something like $3 per trade. So if you are risking $3 per trade on a $20 account, divide 3 by 20. See how many entry you will be able to achieve. Or you are risking $4. Calculate how many entry will you achieve risking $4 per trade on a $20 account. And then you will see how hard it is for you to blow account, because when you lose one, eventually the second one hit TP, you bounce back. Maybe the third one hits TP, you are already in a profit. And then you remain consistent without changing the amount you are risking until you double your trading account. And when you double your trading account, withdraw your capital. Repeat the same process on the profit in your trading account. Double it. Then once you double it, you can now increase your lot size and then increase your stop loss as the case may be. It is not easy to blow account. The same way it is not easy to make profit. The reason you are blowing account the way you are blowing now is because what you are doing is outright gambling. That is not trading. Just as the way I came in and I execute this trade. This is 15-minute time frame. There is no way I am supposed to execute trade when my commodity channel index is at the level of 90 and 80. It's already telling me that there is no room for price to push to the upside. I will be patient enough to allow price to pull back into this zone. And when price is pulling back into this other block here, Already my CCI has already pulled down to my level of 10 and 20, and I'll now be looking for a bullish confirmation signal of a candlestick, or maybe to even give me a divergence to show me end of the retracement, and I'll now find entry to go back to the upside. Yeah, this is how this thing is meant to be. But jumping in when commodity channel index is already telling you that you are at the level of 90 and 80, no, it's not ideal. It's not the best thing to do. It's not the best way to trade. If you have watched this video to this time, thank you for sticking to this channel. Now, coming across this video for the first time, do well to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. And I believe you have learned something new. Please share the video and see you in our subsequent video.